Go, 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 go. IBM. All right, don't have to tell you what that ticker's for. New York Stock Exchange. And IBM, I got a few alerts today. Let's check out the monthly candle chart. Look at that. Top. Let's just do the top here. Look at that. This is using my classic chart trading framework on the monthly candles. Reduced noise. No moving average. Just horizontal trend lines and support. And here you had this top. Further away target. Reached after some turbulence. See that pullback? Always expected for these larger patterns. The secondary larger pattern of encompassing a shorter term launching pattern. Expect the pullback, and these are monthly candles, right? So you got to really hang in there. Emotional landmines. Make sure you're a hardened veteran. And you see that launching pattern here, how that target fast was reached. And the further one, always possible, but support all the way back up. This is previous support and resistance. It's what I call a wall. It goes back down, and then you reach that target, and then you're out about a year later. So what do we have now? Right now, here we have top 180 resistance, and here right now we're breaking down below the 142, 143 level. So this is for me the breakdown level. Same thing as that bigger pattern. Smaller encompassed patterns have higher probabilities of reaching their possible target. So right now, if we have a monthly candle close below that 142 level, we have this short-term pattern. It's going to bring us all the way down here on this support. You see those wicks? That's noise on the intra candles, on the weekly, the daily. Also in line with this previous support here. And that's a nice attainable target right there. Higher probability than this further away target, which is a bigger pattern, which encompasses that smaller pattern, which has to go through that support and goes all the way down here to 105, 122, 105. And this, you're still above this bottom support right here, but you still have to go through here. So always choose, this is an emotional management technique. Use closer, shorter patterns closer to the breakout lines for higher probabilities. Remember, the less time you stay in the stock, the higher your chances are of not landing on the emotional landmine, panicking, moving your sell stop, and anything that could happen. Stop reading the news. All right. So this is good. So I have this pattern here. I'm on my monthly framework. I want to identify the trend. So if I have a breakdown here with a monthly candle close, I know that the trend is going down. So when I go do my Stan Weinstein on the weekly, I know that this is actually a top, and this I'm going to start going into a stage 4 right now. Move it along. Let's move it like that. No. And right here, let's remove all those lines. Clean it up. I'm under the Ichimoku cloud, under the resistance. There's no support below. So, all right. So that's a check mark. My monthly candle. If I could wait for the May close, that's going to be my second check mark. And the RSI, it could keep going down. Another check mark. So what I see right here on the weekly is, I think the breakdown has already started on the weekly right here for IBM. Yeah, this candle right here. See this volume? That's at least twice the average of the previous 4 weeks, 4 or 5 weeks. So here's the candle right here, below the 30-week moving average, below a horizontal breakout line, below the Ichimoku cloud, below the resistance. And there's no support right here. The support's all has been evaporated a while back. The RSI going downwards from halfway point into the lower half. And you have the monthly candle. So let me check it out on the monthly candle chart. Let's go back. And let's see if I'm being too greedy. Remember, I drew my formations here. But what I see now is there's even a shorter pattern right here. Right here. There you go. So let's remove these lines right here. This is the candle on the weekly that broke down. And even on the monthly, I had this pattern here. 1, 2, 3, 4, 5 months. And then breakdown candle below it, reaching its target in that same month. So that's already confirmation though of a breakdown at that level. But right now what's going to happen is going to hit that support. This might be the area where we're going to get a pullback on the, let's put on the weekly right here. So what I've noticed is that monthly defined monthly defined support or resistance when you go on the weekly. It's that invisible resistance where you could have a bounce back. You go through, get sucked back up. So this could happen here the same way it happened right here. And if we have a pullback on light volume, going back here to the breakout line, even better, and then we'll be able to play. So remember, this is part of the motion management, expecting your framework to pan out the way it's supposed to be. So if there's pullbacks on contracting volume, don't get scared because the price action going up. It's actually a good time to get in on that pullback that happens within 1 to 3 months after breakdown. So there's a couple of things you could do here. You could have entered right here just a little bit above at the 145 when it actually broke down. You could enter here just a little lower with price at 142 and then expect a bounce off the 140 and a pullback. And if it's on low volume, you could add some more around the 150 level, 149 level. And then after that, let it ride down. And if you get in now and the price action pulls back, but on high volume, like a nice big green candle, then it'd be a sign to move your sell stop down and then get out. So it's actually a stage 4 in progress right now for IBM. Could be a pullback. Expect the pullback because of that support here, that monthly defined support, and add on once you pull back around that breakdown line. Cool, right? IBM, man, I'm so happy I put alerts. Might short you. Oh. All right, guys. Take care and keep practicing. Ciao.